Can this company make you a millionaire? To find the answer to this question, you need to watch the video until the end carefully. Once again, I have found a company that no one has talked about and shared information about, and in this video, I will provide you with comprehensive details. If you want to discover more new companies like this, make sure to subscribe to my channel and keep the notifications on so that you'll be the first to know about new videos. So, Corcept Therapeutics (CORT) is a biotechnology company that produces drugs that regulate cortisol levels. The company is currently in the commercial stage, and analysts expect high earnings growth in the coming years. Corcept's earnings per share (EPS) are projected to increase by 55% this year and by 86% next year. At the same time, the company's revenue is expected to increase by 34% this year and by 30% next year. However, just like every beauty has a flaw, although this company shows promising direction for 2025, it did not meet expectations in its Q4 results. The figures I mentioned make Corcept one of the promising stocks in the market, indicating that although this stock is speculative, its growth potential remains high. CORT stock's current closing price is $55, but over the past year, the price has increased by approximately 2.4 times, or 137%. The maximum and minimum prices of the stock, meaning the 52-week price range, vary between $20 and $75. CORT's trading volume is quite high, with a 3-month volume of 994K. This means the stock's liquidity is quite good. At the same time, CORT stock performs very well compared to many other stocks, and this is indicated by its RS rating, which stands at 96 for Corcept Therapeutics. In my personal opinion, the fact that this company has such high rating suggests that it has very high potential and its performance is excellent, but the price change is also very sharp. Currently, CORT's market value is $5.84 billion, total revenue is $675 million, net income is $141 million, and EPS is $1.35. These figures show that Corcept has a high profit margin and strong financials, with the company easily turning a large portion of its revenue into profit. The ROA is 19.3% and the ROE is 23.6%, which explains that the company can generate good returns from its assets and is efficient in utilizing its capital. What particularly catches my attention among these margins is that the company's gross margin is 98.4%. This is a very high figure and indicates that the company's product costs are low. However, the company's P/E ratio is currently highly valued by investors, and it is thought that the stock is slightly overpriced at the moment. By the way, the company's current P/E ratio is 41.36. Finally, when evaluating the overall risks and potential strengths of CORT, I would like to point out that its stock has increased by 380% in the last 5 years. Although it reached a peak of $75, it is currently at $55. First of all, I want to mention that investing solely based on the price is a mistake, but since we are already looking at financial metrics, we can make an informed opinion about the price. In my opinion, the fact that the company has such strong potential indicators and has seen such an increase in the last 5 years and last year signals that it will continue to grow in the coming years. Additionally, the company's beta ratio being around 0.6 means that the stock price, no matter how volatile, is less volatile compared to overall market fluctuations, which is a positive factor. Moreover, the company has shown positive cash flow in recent years, indicating that it is in a stable financial condition. However, there are also some risks. For instance, the Q4 2024 results came below expectations, the P/E ratio is highly valued, and despite the 52-week maximum of $75, the stock is currently at $55. Personally, I believe that the stock price being so far below its maximum levels is natural, and many companies make similar adjustments in their charts and prices. In my opinion, one of the most important factors for long-term investment is the company's financial metrics. However, overall, some investors may be confused by the discrepancy in the Q4 report's underperformance. So, what do you think? Do you think it's worth investing in this company? Share your thoughts with me in the comments. Dear followers, I should also mention that this video does not provide any investment advice. It is shared solely for informational purposes. By the way, if you want to earn up to $30 in free cryptocurrency and stocks, check out the pinned comment in the comments section. And for more videos like this, subscribe to my channel and turn on notifications to stay updated with new content. Take care of yourself, and always remember that the $100 investment you make today could make your life 100 times better 10 years from now.